Bitcoin was down sharply early yesterday, but did come back to only have a slight drop. If we take a look at this, as long as we remain below this line, I favor 92,000. If we were to close back above, then I favor upside to this 108 to 111 level. And again, these are diverging. So remember, it used to be 108 to 110, but because this is sloping up, it's going to slowly inch higher and higher.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Gareth Soloway dives into the early collapse of crypto markets, analyzing how tariff fears triggered panic selling. Let's catch him up to uncover insights on Bitcoin's reaction and market trends.
So let's get right into the action here. Let's take a look at the S&P 500. Number one, the S&P is basically flat to positive today. So it does seem like calm is coming back. We're seeing the semiconductors, namely stocks like NVIDIA, get a little bit of a bounce here. Take a look at NVIDIA. This is where it closed yesterday, right over here. So if we take a trend line here, we can see exactly where it's traded. You can look here. This is the closing line from yesterday at around 119 and change here. And again, you can see it's generally traded neutral to positive the entire time, although significantly off its 125 highs. Now, again, the culprit here is pretty simple, right? We heard about this DeepSeek, this new AI tool that essentially puts OpenAI's ChatGPT to shame. And essentially that creates a scenario where it's much cheaper to run, and you can run this new AI off of lower grade chips. And that's really where the kind of the issue comes in, where you've seen NVIDIA, who has these high grade chips, taking a big hit. Now, NVIDIA came out and defended itself and said, hey, listen, this is going to be a lower bar of entry for people wanting to get into AI and data centers, and therefore we're going to sell more chips. But the kicker is their chips, basically the lower, cheaper ones, could be utilized. Now, overall, do I think they're still going to do monstrous revenue? The answer is yes. I do think this was a little bit of an overkill to the downside in terms of these runs, but we have to, again, keep in mind that the markets react first and ask questions later. I already have a bunch of levels on the charts here, folks. You can see the big drop in NVIDIA yesterday, down 17%. And again, keep in mind, this was a $3.7 trillion company going into yesterday. So it dropped over $500 billion in market cap. Now, again, there's going to be big support between 116 and 113. That's not a swing trading level for me. That's more of a day trading or really a 1 or 2 day type bounce. But then you're looking at these levels down here. This one is the big one, the major support. It's this pivot high and the August low from the big drop in August. That's around $96.50. All right. So again, notice how I kind of prep, right? I don't know which level is going to get hit when, but ultimately I know my levels ahead of time. I'm doing my research. And by doing that, it takes out the emotional reaction, right? So again, instead of being like panicked and being like, oh my gosh, it seems like it's down a lot, I should just buy. We don't want to do that, right? We want to say, okay, well, what are the levels here? Now today, NVIDIA is bouncing a little bit, right? We're back to about 121 or so right up here. And that could happen. I mean, you get these little bounces, the buy the dippers come in, but I need to know my levels here across the way, all right? And that's really what we're watching here, guys, all right?
Bitcoin's recent dip below $100,000 has left investors on edge as market volatility intensifies. This downturn comes amid the rising dominance of DeepSeek's ad model, DeepSeek R1, which has shaken the tech world. The Chinese AI startup's latest innovation has put pressure on U.S. ad companies, triggering a broader tech sell-off that also affected Bitcoin, despite its lack of direct ties to DeepSeek. Analysts note that Bitcoin's price movements are often linked to tech stocks, particularly those in the Nasdaq Composite Index. When DeepSeek's model surged in popularity, it sent ripples through the financial markets, leading to losses for companies like NVIDIA. As a result, Bitcoin followed suit, as investor sentiment soured. Despite the dip, Bitcoin remains resilient, quickly rebounding above $103,000. Experts urge investors not to panic, emphasizing Bitcoin's history of bouncing back from major downturns. Many see this volatility as an opportunity for long-term gains.
This is kind of what you'd assume, right? So you look at this and you say, okay, we have double top here. We kissed it right here. It should get rejected. It did yesterday. Maybe there's a little bit more downside in the coming days right here. That'll be your technical support. But the idea behind this is that path of least resistance would be something like this, and then your breakout to the upside. All right. So again, we'll kind of keep an eye on that. If it breaks here, which it always can do. Remember, charts can do anything they want. Just because I tell you guys what the high probability scenario is, remember, high probability means that there's essentially a higher chance it does that than not. But that still leaves the chance that it does the opposite of what the probability is, right? I mean, if you have 80% success or 70% chance of something, it still means 2 to 3 times out of every 10, it does what you don't expect it to do, which is why I always stress to you that no trader in the world is ever a pure winning trader, right? If you're really trading, then everyone has losses. It's just a matter of how many times out of every, let's say, 10 will be a loser. Is it 2 times? Is it 3 times? Is it 5 times, etc.? And it's all a probability game. It's just like a casino, right? A casino makes money because they basically know probabilities are in their favor. I always say that to you guys. You want to be the casino, not the gambler. Let's go to oil real quick, and don't worry, I will get to Bitcoin. Oil is getting a bounce. It did fall further yesterday. This was a great short. Again, I'm out half of my position with Smart Money Commodities and Miners members. It is getting a bounce. I still have half the position left. But again, if you think about it, are we surprised it's bouncing? Look, right down here, and then more support here. There's a lot of support. It was oversold. Let it get a little bounce. The idea here is, let's see if we put in a bear flag and then we break here, or maybe we even go lower to the downside on oil. But right now, this is a big reversal. So you'd look for the bearish kind of chop sideways to up, and then that bigger rollover. Natural gas real quick here. Taking a look at nat gas. Continues. Again, if you don't know your river theory, this is a great example of a river theory. It's a creation I came up with probably over a decade ago, which explains why you have a level that gets hit. This is the river, right? So you come to the river. Oh, man, it's too deep to swim across. Yeah, I tried again. Nope, too deep. It just, every time it scares you away. And then you come over here and you're like, oh, look, there's a bridge. And so you run over the bridge and you're like, okay, now I can continue on my merry way. No trade for me. It's way too short-term down. But nonetheless, great example of a river theory where you gap over the level. It can be a gap above a level. In this case, it's a gap below the level. And again, I call it the river theory. All right. Lastly, Bitcoin, guys. Bitcoin was down sharply early yesterday, but did come back to only have a slight drop. If we take a look at this, as long as we remain below this line, I favor 92,000. If we were to close back above, then I favor upside to this 108 to 111 level. And again, these are diverging. So remember, it used to be 108 to 110, but because this is sloping up, it's going to slowly inch higher and higher. But again, right now we're below this line. This is kind of what I would call a pivot line. And as long as we're below the pivot line, the pivot means you're pivoting to the downside, or it's favored to go to the downside here. If we close back above here, you don't have a lot of upside, but it could retest up in this range. And then you start watching this double top, topping tail high, and those factors there. All right, so just to go back and recap, guys, here we have the spiders holding steady off of the highs of the day, but still slightly on the green side.
Bitcoin is currently consolidating just below $103,000 as traders eagerly await comments from the upcoming Federal Open Market Committee, FOMC, meeting. After briefly dipping below $100,000, Bitcoin managed to reclaim its position above 6 figures, signaling cautious optimism among investors. With the FOMC widely expected to keep interest rates unchanged at 4.25% to 4.5%, market sentiment is now centered on the tone of Federal Reserve Chair Jerome Powell's statements. For weeks, analysts have speculated that the current price action has already accounted for the likelihood of stable rates. However, any indication of a more hawkish stance from the Fed could lead to increased bearish volatility. If Powell signals potential economic weakness or slower inflation, Bitcoin may surge, possibly breaking past its descending trendline resistance and targeting new highs above $110,000. A key factor adding intrigue to this meeting is the political backdrop, with this being the first FOMC meeting under the new Trump administration. Last week, Trump publicly called for rate cuts, citing lower oil prices as a reason for the Fed to ease monetary policy. While the Federal Reserve operates independently, political pressure could influence broader economic expectations, adding another layer of uncertainty to Bitcoin's price trajectory. Market analysts are divided on Bitcoin's short-term movements. Some predict a potential retest of the $94,000–$92,000 range before the FOMC meeting, particularly if bearish sentiment gains traction. Others argue that positive macroeconomic data, including cooling inflation and stable producer price index figures, could lead the Fed to take a more dovish approach, fueling Bitcoin's next breakout. If Bitcoin manages to close a 4-hour candle above $107,000, it could signal a shift toward new highs. A confirmed break of structure at that level would allow Bitcoin to enter a fresh price discovery phase, possibly pushing toward an all-time high above $110,000 in February. With so many moving parts, including political influence, macroeconomic conditions, and investor sentiment, the next few days could prove crucial in determining Bitcoin's next major move. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.